The American Rescue Plan is set to send payments to parents as part of a revised child tax credit, but the credit comes with some confusion. And so to help clear things up, we spoke to CPA Tom Wheelwright, the CEO of Wealthability. Tom, good to see you again. Thanks for joining us. Busy time of year for you, so we thank you for your time here. This revised child tax credit, I mean, this is so, I can barely say it, it's so confusing. Let's talk about the fact that it's revised. What changes?
Well, so it changes really two things. One is when you get it, okay, because they're going to start paying it early. And the second is the amount of the credit and who qualifies for that increased amount. So historically, the credit was $2,000 a child. Okay, now it's up to $3,600 a child. And now if you can have a 17-year-old, before you could only have 16 and under. Now it's 17-year-old, and then they're going to start paying it in July. So there's really a lot of changes, and it's just for this year, although the Biden administration would like to make this permanent.
Okay, so you say it's just for this year. What happens if you have a child in 2021?
So it is for 2021. So what'll happen is that you really do need to make sure. So a couple of things. First of all, this is based on the most recent tax return you filed, because that's what the IRS has available to them. So if the most recent tax return was 2019, that's what they're going to base it on. If your most recent tax return was 2020, that's what they'll base it on. But it really applies to your children for 2021. It's a 2021 tax credit. It's not a 2020 tax credit. And what that means is that if you don't qualify in 2021, but you get the credit because you would have qualified in 2020, you have to pay it back. So
Whoa.
You get this advance payment, you can be in trouble. Now, the IRS is setting up a portal so that you can go and change the information. You can tell them you've got a child. You can give them their social security number. Of course, you have to have a social security number for your child to get the credit. But you're going to be able to do this online. You don't have to wait. You don't have to wait until next year when you file your tax return.
Do different ages equate to different credits?
They do. So children between the ages of 6 and 17, basically, they get $3,000 maximum, all right, because they're phase outs, I'm sure we'll talk about. Under 6 will get, and it's under 6, by the way, as of the end of 2021. So they have to be under 6 at the end of 2021. So my granddaughter, who just turned 6, doesn't qualify because she's 6, as of the end of 2021. Under 6, they get up to $3,600 per child.
You referred to phase outs here. I looked this thing over, and the phase outs almost had my eyes glazed here. Give us a condensed version of how the phase outs work.
So we can kind of simplify it. So really think of this as two different credits. There's the base credit of $2,000, and there's the additional credits, which are $1,000 for those children between 6 and 17, and $1,600 for the children under 6. Okay, so two different credits, two different thresholds. So the base credit, that $2,000, that doesn't phase out if you're a single individual until you start getting over $200,000 of taxable income or adjusted gross income. And for married filers, it doesn't start to phase out until $400,000. So a lot more people are going to get that base credit. Now, that threshold comes way down for that additional credit, and it comes down to $75,000 for a single individual, and $150,000 is when it starts phasing out for married. So, but that's just the additional. So even if you're over that $150,000 as a married couple, you're still going to get that $2,000 credit. Up to $400,000, it starts to phase out after that. So just know that you will get some of it unless you're making, unless you're making over $438,000, I think you get some of it.
And Tom, in reading about this, I keep reading about direct payments to parents. It could start in July, something along these lines. And yet this is a tax credit. I mean, most people see tax credit as something you get later or see later. Will direct payments really be involved?
Yeah, they will. I mean, let's think about the $1,200 payment under the CARES Act. That was a tax credit, and that was an advance payment of a tax credit. Or the $600 in December, that was a tax credit and advance payment of it. The $1,400, from the American Rescue Plan, right? That was a tax credit. So this is actually, they've actually started doing this all the way back here last summer, about a year ago here with the CARES Act. They started making these advance payments on tax credits. And that's, it's trying to get money in parents' pockets faster.
Yeah, I was going to say this is obviously to help families that took a hit during COVID-19. All right, good stuff, Tom. Thank you for simplifying this, because if you go into this alone, you're lost in the woods for quite a while. Good stuff, good conversation. Thank you, sir. We appreciate it.
You're very